Well, good morning, everyone. Welcome to our Tuesday morning session. Hang on one second here. I'm going to get you my monitor. So the market's just opened up. A little bit of a quiet open compared to what we've seen the last few days, I guess. The overnight looks like it was pretty quiet too. So the market left off right about here. A little bit of a move down during the Asian session, not much during the European session, and here we are now, pretty much at the same level. In fact, it might be worthwhile to shoot a trend line across the highs. Putting in a little bit of a rally. There goes the NQ again. Oh, thanks, Jim. Jim giving us a little play-by-play on some of the other markets there. He says the DAX is weak and the NQ is going straight up. Now our advanced decline number is about 500 on the buy, 1900 on the sell. That's pretty bearish, considering there's no great opening gap. Pardon me. All right, getting a first micro macro cross building now. And that is also turning into a macro pullback signal. Let's see, well, there it goes into yellow bars, so I don't need to worry about it now. And now into a red bar buy. Oop, was a red bar buy there for a moment. We might see a test of the extreme here, so it is possible that we could see a little bit of a hop to the upside. Otherwise, we can anticipate the market to be a little bit sideways, a lot like what we saw yesterday. Okay, here we are. We're back at the bottom end of the trading range. This is a little bit aggressive. We hit our break-even trigger. I'm going to see if we can't run this one a little bit. Now, what made me interested in taking this one was the fact that we haven't had a test of the extreme here yet. And in fact, what I'll do is I'll get ready to go now with my bar high low, something a little bit more aggressive. I believe we have hit our high probability target. Yes, we have. So if you wanted just to go all in, all out, take your profit while you got it, go ahead, punch out. We'll see if we can't ride this swing out, or if they're going to tap me again. Nah, darn it. And here we are now with another red bar buy. Oh, that one turned into yellow bars, so we can ignore that one. Falcon giving us an opposing signal. The Falcon actually producing a trend change and maybe even a late filter entry to the downside. Nice thing about the Falcon trade is we do have the second push on the entry now. And by the second push, I mean the signal has engaged. It's retreated from the entry. And now it's looking like, well, we know the limit of the current bar, I guess is what I'm trying to say. So if prices are going to head lower, we know where to sell them from. Okay, and that they're retreating from that, so we can cancel that also. little bit more sideways, wishy-washy chopping action. Also watching gold and crude oil this morning. Crude oil made a decent move lower in the overnight. Here's crude oil on the hawk. We had a red bar buy here, which failed. Our first micro-macro cross came pretty much in sync with that. You're going to notice crude oil a lot of times is going to give us a nice little signal just going into the day, going into the open. This one triggered about 15 minutes before the market opened this morning. But look at that, what a nice little decline there. That could certainly make your morning right there. Start the day with another $500, $600 per contract. That would be all right. So we've got a little bit of a wishy-washy range going on now. Lots of yellow bars here in the hawk. The raptor's starting to come out of the hard edge with a possible signal. Not a lot of structure here. So we did generate a signal back here. Took a little bit of heat on that, but it looks like it's come up here now, is testing the extreme. Here's another signal which we could use as a second push on the entry and simply enter above the high of this current bar. You see it tripped the signal, retreated. I don't mind those types of signals because it shows that the market's going to need renewed momentum in order to bring us in. You can see we've got these highs right here. This is obviously what's causing the market some pain. I think we could anticipate the market to move lower today as well. Jim just refreshed up the advanced decline numbers here. We've got 550 on the buy and 2100 on the sell, so still very bearish in spite of a little bit of a rally, or attempted rally anyway. And yet another first micro macro cross signal here. This one just tripped, so we're just going to go with the raptor trade at the moment. But we had comparable signals on the Falcon and the Eagle. So let's see now how they handle this resistance area. And I'll engage a stop loss. I think we've got some highs around here from yesterday. So those highs right near our target. And where is our primary resistance? Just shy of 46.30. So you can see this bar, a lot of A lot of buying and selling going on there. You can see the width of that bar also. Okay, I think I'm going to roll my stop down below that bar right there. Whenever a bar like this gets a tail on it, it's probably a good spot to hide your stop. Come on, get up there. We're seeing some buying pressure going on here. Looks like this whole 46, 23, 24 area is going to be a little bit of a stumbling block. Nice to see this tail here. The high of this bar right here is our objective right now. If we get somebody to buy on the other side of that, we'll be home free. So you see they keep hitting, there we go. They keep hitting the high and not retreating, so that was a pretty good indication we're going to see a quick little move here to the upside. Come on, a few ticks more. There you go. Come on. Come on. All right. So we hit our profit objective on our first contract. I'm going to be really aggressive now with my stops. I'm not going to give it any more room than what it has right there. We're into yesterday's highs. If it chooses to flinch, go ahead and flinch, take me out. Boy, it's pushing hard on those highs. They're about to tap us out here, but that's okay. There we go. Well done, Mark. Mark said he picked up 20 ticks on 3 contracts on the Falcon. Way to go, Mark. Nice way to start the day for sure. So that was his trend change signal. Or I'm not sure whether Mark got in on the early trend change signal or the proper trend change signal. Doesn't matter much. They both initiated the same place. Nice thing about this signal is that you've got a well-established swing low right here that you can cover below. And even if you wanted to offer up a little bit further, you could even go down there. But if you took that swing low, nice little move to the upside, nothing wrong with that. Definitely a good way to start the day. Hit our high probability target, and now we're slowing down a little bit. We could see this go higher still, but I'm just as happy taking the profit when I have it. Okay, so far all three or all four birds gave us solid signals. Here's our first micro macro cross in the hawk that had exceptional follow through. Here is our hard edge bounce slash trend change signal on the eagle. And it looks like that one has also found its high probability target. No, sorry, not quite. Almost. And of course the hawk and the raptor, which we've already looked at. Look at this buying spike right here. Oh, and here comes another one. Lots of orders on the buy. Let's see if that translates into a breakout now. Yeah, so look at that, all those buy orders. Did the sellers absorb them all? Look at that, two back-to-back spikes in the buying. We'll just focus here on the Geiger counter for the moment. Okay, so the selling is a little bit shallow. Lots of buying going on here. Little isolated islands of buying. The buyers aren't letting it go. Here comes another one. Lots of orders going through here. I'm just looking at the bid and the ask. There's a little bit of volume there. All right, well, not the follow through I was anticipating. We're not really seeing a big move one way or the other. I thought that might perhaps lead to another breakout higher. Okay, we've got a macro pullback signal on our hawk now. Thing with the macro pullback signal is it's a prelude to a test of the extreme. very much like the red bar buy down here. And because of that, I usually like to see enough room to profit so I don't get stuck in a trade that's not going anywhere. And there's not a lot of structure down here at which to cover my trade. It looks like I can profit, but my profit target is going to be very, very close to my current high. That's going to make that a little bit more difficult to take. It's not that you can't take it, but maybe it's something you want to dial down the risk, or maybe just throw a onesie in it. Here's the first micro macro cross. Say maybe throw a onesie on it like that. You can see our profit objective is the high of the morning. We might have a hard time hitting that. Okay, so here now is our first micro macro cross signal. It's complete. There they go. They brought us in. Actually slipped a tick. It might turn out to be a 4-arrow consolidation. That would be a little bit more reliable maybe. See, this may well turn out to be our test of the extreme now. Come on, give me just one more bar. So we're seeing the sellers trying to sell now as we get near these highs. And if the buyers take this bar now and finish it higher, then I know this is going to be a good bar at which to cover. There we go. So I'm going to cover below there. And now we're at break even. And here too, it's a onesie. I'm going to let it run. If it breaks these highs, it could go. There's a lot of selling pressure on these highs. If nothing else, my broker will be very happy. Come on. Come on. There you go. All right. Notice the width of the bars. That tells us there's a lot of activity going on there. Look at the Geiger counter here. The width of those bands. A lot of contracts being traded. And we do have a little bit of a spike here to the downside. That could have flushed a few sellers. We'll see. So we've hit our high probability target. Again, I'm being very aggressive with my stop. If you wanted to be more conservative, you could leave your trade here at break even, see if this runs out any further. Primary resistance is up here at 46.30 or just short of it. Could even throw a profit target in there. No. Well, we got some profit on that one. At least it wasn't another break-even scenario. Throw the YM Raptor up here for a moment. Jim said the hard edges are reversed. I'm not quite sure what you meant by that, Jim. It looks, although your bands are a little bit faster than mine. We did get a pretty good little soft edge buy right here. If you're going to try anything counter trend, remember you need to see that test of the extreme, right? Very important. Whenever you get that test of the extreme, you can usually anticipate a little bit of a move. Now here is an example where the test of the extreme did not really give you much follow through. So test of the extreme right here, we got to stop it. We got a buy signal right here. Didn't really get very high. Did give you an opportunity to adjust your stops, however. You could have either rolled your stop here, perhaps even here off of one of these bars with a tail. So hopefully it didn't cost too much money to be wrong. Kind of skewered by the median line on our support and resistance suite, though. You can see we've got a fairly broad range to trade today, which yesterday the range was very confined, and you see it never really got out of the primary resistance and support area. It's just skewered by the median line practically the entire session. So far today is not that different. And here we are again. Not much going on right now. The market is dead flat. In fact, I'm going to snoop around here a little bit. Are we anticipating a report today? What is today? 27 today. Oh yes, thanks Mark. I just pulled that up. Consumer confidence report is out or coming out right now. Indicator warehouse, if you go to their main page and you roll way down here to the bottom, I'm not quite sure why Adam stuck it way down here, but you can click on economic calendar and there you go. You have the reports pending for today. Most of these are little. But sometimes the market will take anything it can get. Gold put in a quick little rally while we were watching our NQ trade. Here's gold on the Falcon. Gold opens quite early here on the West Coast. They open at 5:20. And let's see, quick little hop up there. Early trend change signal here. Proper trend change signal came much later. Didn't matter though, still had some follow through. And then we got a little waffling going on, and then we get closer to the North American Index open, and we get a nice little trend change signal there, and boom, there she goes. So no signal, subsequent signal, at least not on the Falcon. We did have a macro pullback signal on the Hawk. All right, well, we're kind of waffling now. The market seems very content where it's at. So the advanced decline evening up a little bit. Jim says 760 on the buy, just under 2,000 on the sell. So buyers getting a little bit stronger, no doubt, because of some of these rallies here. We're very, very sideways though. Crude oil not doing much. Still in a tailspin, back down to $42, $43 a barrel. And of course, we all know that means we're going to see instant savings at the pumps. Being facetious, of course. I'm sure it's the same wherever you live, but here on the West Coast, it seems they look for any excuse to hike the cost of fuel, and then it's painfully slow when they knock a couple of cents off. A little comment there from Mark. Mark agreeing with my assessment of the oil companies. Ay, ay, ay. You know, when it gets like this, you gotta be careful you don't start taking a trade out of boredom. And if you do feel like taking one out of boredom, just do it. Make sure you're doing it in sim. Try to learn from it. You know, if it works out, great. If it doesn't work out, well, at least it didn't cost you anything. All right, we're back into our hard edges now on the Eagle and the Raptor. I don't think we've seen a real test of the extreme here. I wouldn't qualify this spike as a test of the extreme. Not yet. I should probably shoot a trend line across the bottom here, see how this falls. Make a slight adjustment there. If we draw a trend line up across here, you can see we overshot the trend line to the upside. Now, normally you would think that would be bullish, right? Market was strong, rallied through the top end of this little sideways trading channel. However, it tends to be a sign of weakness. We'll see what kind of rally we get out of this, but right now, the NASDAQ is looking weaker rather than stronger. So we've got a first micro-macro cross signal now. The problem, as before, where are we going to cover this bad boy? Right? The best place to cover it is up there. I can take this trade. I'll no doubt do it as a onesie and leave my profit target to run. Because we are going to see a pivot in here somewhere. We are going to see a test of the extreme. We are going to see a better entry if we're serious about shorting. So here the Raptor giving us a pretty big reaction off of the hard edge. We're getting a little bit of a test of the extreme now. Still going to cover it up there. This is really fundamentally just the safest place to leave my stop. As much as I would love to run a tighter stop, this is the one that really tells me, no, Eric, you blew it. You're on the wrong side of the trade. Get out. If they fill me down here and retreat all the way up there, I've really boned it up. Okay, so I will leave a runner in play. I'll cancel the break-even trigger. Profit target, high probability target was down here near the lows. If we end up breaking the lows, I'll snap the trade to break even. We'll go with a more aggressive stop strategy again, like the bar high low. That's interesting. Jim says all the indices are out of sync. None of them are acting the same, which is odd. Usually you see a little bit of confluence between them, at least between the big ones. Okay, so now our NQ trade struggling with these lows. We're going to see some buying action come in here in a moment. So our first micro-macro cross, we would have hit our break-even trigger. We're just hovering near our profit objective. Interesting comment here from Frank. Frank says, I find on early trend change signals, if 3 of 4 indicators are in sync, I will enter just below the previous low or high, and the results are fairly good. So I think what Frank is saying, now I'm not sure if you're referring just to a tool like the Hawk, where we've got the different components, like the macro line, the bar color, and so on. In this case, I think Frank is saying just because the macro line was out of sync, he would still consider entering below this swing low. And yeah, I can see that. Very good. Come on now. Come on. Come on, come and get me. I'm down here. Oh, what a struggle. Okay, if this one snaps higher, it is going to go a little bit higher. It may well even challenge the highs. Big tug of war on that bar. Oh, Jim says the DAX is selling off. There's hope. Maybe that'll trickle over here into the NQ. Come on, boys and girls. Come on, just give me one bar with a wick on it. I know I've got this one over here. I've got this one up here. Well, actually, I should probably take that one. Even if this goes into a macro pullback, well, a macro pullback, this one should be safe even on a macro pullback. That's what I'm trying to avoid. I either want it just to get low enough here that I can get the trade to a break-even type situation, or avoid a macro pullback. Come on. What's my Geiger counter doing? Oh, it's fairly level. we're getting comparable signals. You see the Falcon here has produced a trend change signal, hasn't tripped yet. So there's an opportunity here. You probably want to take it, well, actually if you fill on the hash mark or the low, it's going to be the same. Same kind of situation as what we're looking at here with the hawk. You know, if we're going to be brought in, we don't want to get stopped out on some sort of reversal. In fact, you may even want to risk it above the primary resistance right up here. Exact same situation. No real test of the extreme. That's the problem here, right? So this makes this a much higher risk trade. And here they come. Now we're going to see that test of the extreme. So we can cancel that. And I'm going to stay here with plan A. Sounds like it's still a mixed bag. Jim says the DAX is selling, transports are at a new low, and the DAX is now getting stronger, perhaps offering up a buy signal. The lack of a test of the extreme is what's giving me all the heartburn here. And we've broken down, so we're below the lows. We've got our test, we've got our retest, and we know that when we break a support area, we should see at least 2 legs lower, 2 moves lower. So I'm working on that second leg right now, trying desperately not to get myself stopped out too early. Come on, there you go. All right. We'll enable our, oops, no we won't. Better check the preview, Eric. There we go. There we go. Okay. So we've got a little bit of room now. If they go back down to the low of the morning, where was that? Around 46.10, 46.9, somewhere around there. Jim managed to nurse his struggling trade back to break even. Yep, sometimes we're just happy to get that, aren't we? Okay, so not bad on a single contract. We're pretty much double our profit objective. Normally we will see some sort of reaction when we hit that double mark, if we haven't hit it already. There we go. Put the squeeze on it now. Okay, well, I'm pretty happy with how that worked out. Of course, the market may continue much lower from here, but didn't stop myself out, which is a bonus. And we're back now on some trendline support, as you can see here from our eagle. That might be enough to give us our test of the extreme that we've been holding out for. Jim's looking to buy the retrace on the YM. So here's the YM. Looking to pick up on that test of the extreme. Jim a little bit more aggressive than myself. So he's long at 91. Taking a little bit of heat at the moment, but we'll see. We'll see what comes out of that. Yeah, Jim says my bands are not in sync. He says the gray should be on top if it's bullish. Yeah, but don't forget my settings are longer than yours. I think you're running a 6 and an 11. I'm running an 8 and a 10. 8 and a 10. So mine are going to be a little bit different. If we go back here a few days, then they eventually do cross over, get more bullish. All right, so it looks like some buyers are showing up now. Our bars are getting a little bit wider, suggesting there's some additional activity at these particular price levels. A rally back here to around 46.20 or so would make for a decent test of the extreme, I think. So 46.20 would put us back up here. And nothing magical about the number. I'm just kind of eyeballing the range where there might be some resistance. With a test of the extreme like this, we need to see the buyers make a real effort. Otherwise, we're not going to flush the buyers out before the next selling wave. Alexander, good question. Alexander's asking, when you have multiple targets, like T1, T2, T3, how many ticks for each bird? Normally, I just tend to go all in, all out. So our high probability targets for the Hawk are $50 per contract. The Falcon $100 per contract. Same for the Raptor. And the Eagle $200 per contract. If you were going to look for second and third targets, well, the Hawk is easier because I would make the first target the Hawk scalping target, the second target the Falcon target, and the third target the Eagle. So in other words, T1 would be $50, however many ticks that equates to. Target 2 would be 100, and target 3 would be 200. Now, with your other tools, however, it becomes a little bit more problematic. You have your high probability target on the Falcon, which is 100 ticks. You could make target 2 200 ticks, which is your Eagle target. Target 3, though, you may end up having to go to something like a daily chart, or what you're going to need to do is you're going to need to do a little bit of research and just go back through your chart and look at some of these big moves and just figure out approximately how much of a move it was from signal to where you may have been stopped. And you can use best case scenario. So from here it's, well, we'll say 46.15 to 46.25 just for easy math. So that's 10 points, that's 40 ticks on that move right there. If we went from, say, this one here, 46.05 to 46.25, again, just rough math, that's 20 points or 80 ticks. Oh, here's a pretty big move. So from entry there, we'll say 46.30 down to 46.15. Okay, that's only 15 ticks, pardon me, 15 points or 60 ticks. Oh, here's a really big move. See, chances are hitting T3 is going to be like your home run trade. So we'll go from 46.05 to 46.35. So there's a 30-point move. That's about 120 ticks. That's going to be your absolute largest. So I would probably go target one, $100, or in the case of the NQ, 20 ticks, 40 ticks, 60 ticks. And if you ever hit your T3 target, I don't think you're going to hit it all that often. Here on the Eagle, it would be the same kind of exercise. If you're going to go with T2 and T3 targets higher than the high probability target, you're probably going to end up holding overnight. Because I think the 40 tick range that we have for the Eagle pretty much encompasses most of the big moves through the day. So let's say you took that one, this trend change signal, you can see you hit your high probability target. There really wasn't much more after that. Of course, there's nothing to say you can't go with tighter profit targets instead of just looking to expand on the T1 target. You know, I'm just throwing numbers out here, but say, you know, T1 40 ticks, T2 60 ticks, T3 80 ticks. There's no reason you can't go with tighter objectives also. So you could go maybe T1 20 ticks, bank some profit, Get that $100 when you have it, when the market's showing it to you. T2, 40 ticks, that now becomes your high probability target. And T3, 60 ticks. If you happen to, catch a market that's really moving, like this one right here, I think that one you could have probably got 60 ticks out of. So let's set that up. We'll go 20. Come on. Oh, I need a target. What's going on here? And we'll go 40 for target 2. And we'll go 60 for target 3. Now this, of course, you're going to need to be able to take 3 contracts on a position. But let's say we set it up like this, took this hard edge bounce. You would have hit all 3 targets and you would have profited along the way. You would have locked in profit. So there's nothing wrong with doing that either. If you had just gone with the high probability target, you would have hit target 1 here. Oh, actually this one, we probably could have got 40. Yeah, look at this. This one this was a monster move. You would have got all 3 of your targets. But these kinds of moves are a little more rare. They're going to occur a couple times a month. But that's not to say that you wouldn't have done just as well trailing a stop. But it sure looks pretty, doesn't it? $900 move there, banking profit en route. But those are really your 2 options. Where you either take all your profit on target, which is my own personal preference, but that doesn't mean that that's what's going to work for you. Or you can split up your trade to either take incremental profits or try to grab some of those runners. But really, if you're going to expand on the high probability target, you need to do a little bit of research in the market that you're trading. Those figures will be different for, say, a market like crude oil, which will typically make $1,000 range in a day. But that's a very good question. Jim says he tends to do better going all in, all out. Also, of course, the logic is that you can re-enter a trade if the market's really rallying. I think it depends on your personality as a trader. Some people can't stand the notion of having the market run away without them. We're all different. There's no real right or wrong answer here. Alrighty, a couple macro pullback signals here. Here comes the pullback now. Maybe get us up into that 46.20-ish area. Sellers leaving a little bit of an island here, a little bit of a spike on the Geiger counter. The Raptor giving us a trend change signal. We've got our little test of the extreme. Now this is counter trend. Don't necessarily follow me in on this one, but I'll demo it for you. What I would do is I would enter, the signal has since tripped, but we'll just enter above the high of the current bar. And all I'm looking for here now is a test of the extreme. You know, whenever we encounter the hard edge, we anticipate some sort of reaction. I've got the little itty bitty test of the extreme to the downside, looking for the bigger test of the extreme of this. Okay, we got some buying pressure. Sellers are letting off a little bit. Okay, here comes that hard edge bounce now. Come on, get up there. These soft edge sells, or in this case a soft edge buy, tend to work better when the band has a little bit more width to it, and of course that all-important test of the extreme. Let's see if I can find you a decent example. They're usually a little more prevalent. The test of the extreme will come very quickly. It usually develops, over the span of a few bars, and then we get our, in this case, soft edge sell, and the market heads lower. Here's a better one. And what we would be looking for is a retracement to the hard edge. Now you can see that's a little bit of a problem with the current trade because we're already at the hard edge. So I'm throwing a lot of weight on this little test of the extreme signal that we have down here. The buyer's showing some support off of these lows. Last time they rallied it up almost to 46.30. Oh, come on. Get up there. Got some big buy orders showing up here. Come on, just keep hitting the bid. Let's go. Very strong on the buy there. Look at how the Geiger counter is, how the wheel was totally skewed here to the long side. That's huge, huge buying pressure. Now, of course, it's the opposite. We got huge selling pressure right on these highs. This is where they're all anxious to sell. So if we get a pop up through there, come on, you stinkers. There we go. 46.19. Now they're gonna should make a little bit more progress. There you go. So I'll roll my stops below the lows here, and we'll trail a couple bars back. Come on. There you go. With the Geiger counter, I like to see this dial meter. When I'm buying, I like to see it really just stuck here like that, right on that full-on hard edge. Show me all the buys. Just chewing through those buy orders. Come on, get up there. There you go. Come on. Oh, you stinkers. Just give me one more bar. Well done, Jim. Jim bagged his 10 ticks. Yeah, I think we're at our, yeah, we've hit our profit objective. Or our 10 tick target anyway. Trying to sneak a little bit more out of this one. Come on, you scoundrels. Geiger counter still full on green. Come on, let's get some follow through now. Well, it seems as though they may be weakening a little. I'll protect just a little bit more profit here. Let's go. Come on. Come on. Oh my gosh, there you go. Get up there. Get that profit target. Look at that. Kissed it right on the number. Oh, you guys. Don't you dare. Get up there. Oh, you stinkers. Nope. They're going to tag us here in a moment. Still a profitable trade, but unfortunate that they hit us right on the number. Well, they're starting to chew through some of the buy orders again. Maybe, just maybe, we'll ride this one out. No. The trail indicator, the trend indicator, this little envelope around the bar is suggesting we're going to see a little bit of a move lower. And that's what we got. Enough to hit our trail stop anyways. That does resemble a full-on test of the extreme now. Jim says, I don't have a clue today. I go long too soon, I go short too soon. Yeah, some days you just look at the market and you scratch your head. Now that we have a reasonable test at the extreme, take a look here on the eagle. I would not be surprised to see the market try to head lower. You remember earlier this whole 46, 23, 24 area gave us a whole lot of grief on our hawk trade. Well, we're right back there again. So we're working a red bar buy, which we know tends to be a high probability signal, but I don't know, given today's range, given the fact that we overshot the trading channel here to the upside, like I say, that might make me a little bit more bearish than bullish today. Oh, might have spoke too soon. So first micro macro cross here, trend change signal here, red bar buy here. We took the trend change here on the Raptor already. Never underestimate the NASDAQ buyers. I tell you, folks. Of recent months, my biggest losses have always resulted from trying to short the NASDAQ. I don't mean here in the room. I mean like from a position trading, end of day type point of view. Every time I try to short them, they just eat my lunch and say, thank you very much. Hey, way to go, Mark. Um, Mark says, it wasn't easy, but my patience paid off. I took another 20 ticks on the Falcon, 2 trades, $600 on the day. I'm done. Well done, Mark. I know that last one, I really had to nurse it a little bit. Yeah, Jim says, ditto on the YM. Don't short the YM. No, I don't know. You look at the fundamentals and stuff, and it makes no sense, and yet the stock market keeps going higher, which is good. Don't get me wrong. I don't want to imply that the world's coming apart at the seams, which it is, but that's another story. Carrie asked, can the Geiger counter be purchased separately, or is it only part of the Raptor? No, it is separate. I only happen to have it on the Raptor, but no, you can purchase this separately from Indicator Warehouse. And yes, it's a very handy tool. I only designate one tool per bird for clarity's sake. So in other words, here on the Hawk, I happen to have the Day Ranger. On the Eagle, I have the Trade Forecaster. The Raptor, I have the Geiger counter, and the Falcon, I have the support and resistance lines. But that is only for clarity's sake. You could put, I can put a Geiger counter here on the Hawk. I've thought about doing that because it's very useful, especially for some of those scalp type trades. But you're going to see the information is redundant. It's exactly the same. But yeah, to answer your question, no, there's no reason I can't have the Geiger counter on all the charts, but all the readings will be the same. When you load your Geiger counter, you're going to notice that it's in the background. This is true for almost anything that you want or add to your chart. If you want it to be in the foreground, here's a little trick that you may not be aware of. Click on your bird or your tool, whatever it is that you have there. Hold your shift key and then roll your mouse on roll the scroll wheel on your mouse. That's what I'm trying to say. And you're going to see you have these different levels. And what that does, there's actually 8 different levels here. And what you're doing is you're moving the chart into the background. So you see I moved the macro line and the micro line into the background. Now I have to do the same thing for the bars themselves. So I click on the bars, hold the shift key, and roll those into the background. And now my Geiger counter will sit on top. Even if you don't do that though, there's almost always a blank space on your chart where you can put the Geiger counter. There's a little FYI. If your price bars and moving averages and whatever are on top of your tools, that's how you can do that. You can move them into the background. All right, well, we're almost to the top of the hour. We're back into this whole 46.24 area that, like I said, gave us problems earlier this morning. This would be a good looking test of the extreme though. Gold also pretty much sideways since the early rally. Here's gold on the Eagle. Not much going on there. Got this rule of three type signal out of the North American Open. Very, very difficult to take. We had comparable signals on the Falcon and the Hawk. This would have been a very difficult buy on the Eagle, but you can see, regardless, Falcon or Hawk would have had good follow through, and now we're just kind of stuck. Just going sideways. Thank you very much. Crude oil may be trying to put in a rally, maybe. Got a macro pullback signal here on the Hawk. This is your whole breakout test retest scenario, and we just tripped there. Trouble with crude oil, of course, is the expense, right? Trying to cover this trade deep enough because, well, hey, we haven't really seen a decent test of the extreme here, have we? We haven't really seen the sellers give up the market. So it's a plausible trade, what I've outlined here, but this is going to be the determining factor. Are you able to risk it deep enough to avoid getting stopped out prematurely? It does look as though they are going to head higher. Big question is when. All right, you guys, I think we're going to close the room down for the day. If you are trading this afternoon, I could see the market getting back up here to 46.29. I think we might, emphasis on might, see the market settle again around 46.20. That seems to be a very happy place for the NQ. So if it tends to get up here around 46.29 again, you may want to look for shorting opportunities. Right now we have made a test of the extreme, so it is not unreasonable to expect the market to fold over here and perhaps retest the lows, but very indecisive at the moment. So I wouldn't get too anxious to buy or sell anything right now. Like I said, this whole 46.20 area, the market seems pretty content to hang around there. Just a reminder, tomorrow being Wednesday, we're going to meet at the public trading room. So I hope you'll be able to join us then. And I'll see you guys bright and early. Talk to you then. Bye for now.